I'm here to defend my lines that I drew. And I really don't want to delete them, but I can redraw them because I just know I can just see all the structure here. And the map stays the same. So I don't really... I actually left out a couple lines. In fact, I hate when I get done with these, I post them, and then I think to myself, I could have put another line in there. And I could have. And it's... I think everybody sees it, right? Bam. Look at this. Bottom, top, and this bent part, this curved part, this is where people get their ass killed. They sell into that because it is a double top from here. But this is the pivot. This is where you need to put the tight orders in with the tight stops. And you're going to be having a whole nother price pulse here. This was a symmetrical price pulse where if you took this measurement here, and when people talk about measured moves, I don't think you can go past one pulse. How much money are you trying to make, you know? So if this is your price pulse, and let me make it pretty dramatic here. And yes, sometimes we can overline, but sometimes the market demands it because the triangle formation is so such a big moneymaker that you really have to take that into account, the congestion and the indecision. And then when there is a decision, it's going to break out hard, and that's going to be pretty quick and dirty money. And you just want to. So I'm going to duplicate this, and I'm going to hang it off the highest high within that line. So I actually exceeded the price pulse, but I'd already, see, I hadn't drawn a line here, but notice where we landed at a perfect pivot right there. So now we're in the process of forming a triangle, and of course it bounced off of my trend line I drew. Of course, when the guy was, the guy who I overlined, he commented at this point. And this was the buying opportunity to buy a ricochet off this double top. Bam, 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 bam. And so it's holding this line here. And this is like cloud trading was rated the highest money making technique by the trade competition, because cloud trading has a future price. You're trading futures. That's why they call people trade futures. You're speculating where it's going to go. So for God's sakes, you've got your orders at these things, and this is the density pack. This is the pivot. So this is when it's like, now this one, I should probably change the color, but it takes time to, you know, this stuff takes time to decide what color, because I'm using black and white background because all these blogs are white, so people have their monitor at some crazy color. So I'm just going to try to pick some different colors. Just so now I wouldn't want to move this one because this is a key deal. So if the market tumbles, where's it going to ricochet off of? That's the question. So like these are scalp windows now because the market's left this. What's fascinating? Okay, now I'm gonna delete these, I guess, because I just want to point out one item. But there's funny phenomena here with gold that when it comes to the price of 1300, there's something scary about it being near 1300. Market doesn't want to be at 1300. It looks like. Look how it launches through the 1300 window. Look how hard. Look at this. 1 thrust, 2, 3, 4. I mean, what a violent... In other words, psychologically, once the price gets to a little above 13, people can actually do the math on that. Even the bankers. Even the guys jumping off roofs can figure this out. So, for the explosion window, this is like Trading is just so stupid. It's so retarded. Okay, so yeah, we can get by with just this many lines. Now this would be 1,200 gold, which 1,200, right? Buy, right? Sell at 1,300. But funny for the scalpers, and look even back here. Of course, this is a brutal crush through this price. But really, just, less is more. I agree, but I'm not using. I'm projecting in the future. So when I do this, which anybody can do at home. Try it at home, can find the highest close within this line I just drew, which would be right there. So your next price pulse would if you're using this concept, this low, you're going to find the highest close within there. It's like this. I just don't think that's going to happen. I think we're going to have to form a triangle, and so yeah, let's just get let's go minimalist, Mr. Anti-Line. For Mr. Anti-Line, we go minimalist. We have ways of making you draw more lines later. So yeah, like here's the breakout. Okay, breakout. Pull back. This is the entry because this is a classic. Breakouts usually they never hardly take off and make a stellar run out of the gate. A real good breakout will always pull back, and it should come confluently with if you watch this guy the guy just does real simple analysis like this, and people say, oh, it's classical analysis, we're on to like well, people have reinvented this Gartley pattern. I don't know where the hell that came from. I thought that was something new. Some guy was dropped acid and came up with that, but apparently that's been around forever, Phil. But, this stuff, the head and shoulders thing has been working for so good for so long. Why would you want to, I guess the American way would be, if it ain't broke, fix it till it is. I mean, it's incredible. I don't even know what to say, but here, I'm just going to draw as few lines as I can, because, it was a bit much. Okay, now, I do like to copy these guys with the different colors, maybe. Now, let's just go 2 colors here. So, if I just drag it up and just look for the most obvious, like when this bottom becomes a top. Now, Fibonacci is useless because the market really is its own Fibonacci, believe it or not. If Fibonacci exists in nature, then if the market's natural, then wouldn't it make sense that see, now look at this, this is right really close, so market totally makes sense as it tries to heal itself when it came in here like this, and it wanted to take out this. It wanted to fill this big hole that had been forming here. So once all this, and it just caved in on itself. It just took all that out in a big gust. But you knew that. You knew that back here. Like, plummets down to here, double top. Top's taken out, but see that little bend there? Barely see it. That's the curve. Then we're going to fill this whole hole. You're gonna want to sell here because that's the last known bottom that took out. So you probably got filled here if you turn on the candles, right? If you're drawing your lines on the lows, which I don't recommend, because these things are this is widespread fills. People think it's manipulation, but it's just people. Yeah, manipulation means moving something. Like when people ship you stuff, and then they complain about the shipping fees. And one person was telling me, oh, they're charging me tax on the shipping. They're probably charging you tax on the tax on the tax on the shipping. Don't look down. But look at this wick on here. It's very deceiving. Let's turn the candles off, man. You don't need all that stuff. I'm not overlining it. I mean, I'm overlining it for a person that that can't take lines. But look at the simplicity of this system. You know, the dumber it gets, the more money you make, because you don't have to worry about this stuff. Now, some other guy asked me a long time ago, how do you draw those as it's happening? All right, just like this. Now, so you're sandwiched in this triangle. Now you got to change your strategy to triangle breakout theory here, because you're forming a triangle. You don't have to drop down, just keep on the daily chart. So here's the current tight triangle right there, and maybe we have to come down in here, backfill, pick up some buyers, and that lightning fast blow through that round handle is just amazing. Probably going to get the same situation up here if we can break out. It's going to be a big vacuum hold here. This is going to be a slam right to 1400. That'll be very quick and dirty. Now it would have to consolidate in here. And maybe it does have to come below the 1300 and spike out, and all the spike out and tag that. So you basically start thinking about placing orders down here at 1260. So, I mean, and then you're going to time it like this. It's going to take forever to get there. So I recommend scalping if you have no patience, because otherwise you're just going to be on the, suicide watch. Because what's your next chance to get in this thing? Comes back near 1300. The window that the market just rips through. We'll spend no time there. And it probably doesn't look like it spends much time down here. These are the high volatility windows. Like, if that market ever came down to 1100, but you know, it's not gonna happen. So, not tomorrow. So go to the weekly. And here's a classic. Who couldn't see this coming, right? That failed to break out. It's a major cluster top bottom here. Here's the top bottom. Well, hindsight's 2020. It's all coming back to me. All the conventional wisdom that people always want to take the conventional wisdom, and then yeah. So that that seemed to play out, huh? And then this rejection of this bottom top theory pivot. You knew that wasn't going to be able to hang. That wasn't going to hang. It wasn't going to happen. I mean, seriously, you have forever to get on these trades. Come on, this is a weekly chart. But look at the internal top bottom here. I mean, does it get any dumber than that? You know, not much. And then here's the one I like to draw, is the inverted head and shoulders on this back, on the back 9 here. You can see the convergence. This cannot, it's not withstandable. Just connect the dots here. You see these pivots, the rollover, and you on the weekly you're limited to how many lines you can draw, so you can kind of almost connect every possible top to bottom, regardless of its head and shoulders. You can go shoulder to shoulder, you can go to heel. It just doesn't matter. But as you can see, all roads lead to a vector that's just unsustainable. You know, at this point, people are projecting gold down to they're calling for 1100 on gold, right? Right, sure, buddy. Okay, then go to the monthly. Take a look at that. Huh. It just gets dumber and dumber. Dumber and dumber. I mean, these guys could have made a mint, right? Bottom top. About 1200. It's so boring. Okay, so look at this. That queues up nice, huh? The monthly close. Don't need a PhD. Just need some high leverage account. And people say, don't trade with the high leverage. I'm like, why not? I mean, it doesn't matter. I mean, just adjust your... You don't have to... Oh, I trade 100K. Yeah, 100K, 10-1 leverage. You gotta have 10 grand in your account. You would put 10 grand in a trading account, like you didn't know how to trade. So, yeah, crazy, nuts. People are nuts, man. What are you gonna do? So here, let's connect the dots here. The monthly really puts you on a line diet. Can't have a chance to really do much damage. So let's use this as a fractal and copy that. Hang it to the next node. Hi there. Okay, I'm gonna take this stuff off here. Okay, so we've performed this. We have this symmetry here now. That's the cup handle theory there. And so this triangle may take forever to form and just kind of just frustrate the hell out of people. Here's your bottom, top, double bottom, failure, come down. So current theory in this would be, here's your channel, pretty steep. I guess we broke out of that channel. It was pretty steep. Even on the monthly, people are saying, whoa, like, I think we're going to break that trend line on gold. Even they were capitulating there, huh? This is too funny, but this is going to be an exit. And this would be another exit. This is kind of like double topish thing here. That's classic. I guess gold, you know, could whittle down to $900 one day. I mean, God knows, but I can only imagine the short term. You know, like how long are you gonna live? I mean, you could speculate way out into the future. I've seen people do this. It cracks me up. They're like, well, the market's gonna do this, and that's gonna do this, and that's gonna do this, and that's gonna do this. And well, God, I hope so. This would be a perfect, you know. And then, but really, I mean, you might be dead by then. You're probably going to run over by a car about this point, you know, like right here, you're up, you sold here, and you're like, woohoo, look at, I know where the target's at, and I'm getting out at 1172. Of course, in your mind's eye, the market looks like this, sadly. You distort reality to the point where you're just like, oh yeah, it's going to be like this Elliott wave theory. The only problem with the Elliott wave, Elliott should have just been a jazz musician. You know, but this is the scenario. This is top bottoms, and then, of course, not to mind you, the wicked, the market makers come in and they make it look like this. Okay. By the time they're done with your account, it's like you're just like, whoa! The minute you like, what? Why can't this happen? Am I not? I mean, why can't this happen? Like, say everything's going along just fine one day, and you know, everything's rosy, right? And here comes like, we're here, okay, everything's going like this, and all of a sudden one day something happens bad, and their gold spikes up. Wow, what are they going to say then? Don't forget, there's a hole fill in here too. So not to say gold's going to 5,000 an ounce, but when it goes for the retest, I don't have a yearly chart, but this monthly chart, it goes for the retest, or it does this, stops everybody out, consolidates, and then I'm just saying, I don't know. That's my my gold analysis.